Hello, Dylan Lange, branch manager, loan officer at Evergreen Home Loans, Welcome Home Loans. I didn't leave Evergreen Home Loans or make a big switch. As you know, I've always branded as Welcome Home Loans. It's a DBA, and I own WelcomeHomeLoans.com because 99.9% of my business is here in Whatcom County. Did a whole brand refresh, redid the website, did the sleek black and white, really loving it. This is what I do when Cruz is sick and is waking up, is I redo my website at 5 a.m. So this is the byproduct of that. But it's same kind of format, but check this out. I'm really happy with it. See how things slide in? Boom. All of our production. We served 358 families last year, almost 150 million, 96% closed on time, 22.4 average app to funded date. So closing really, really quick. So I got my reviews. I've got over 55 on Google, 165 on Zillow, 185 on experience.com. Thanks to many of you. I know a lot of this goes out to my database or people that have used me for a refinance construction loan. So thank you guys if you have reviewed me. If you haven't, jump on this website. I'd love to hear your feedback. But yeah, just did a total brand refresh. As you know, all of the resources, the mortgage updates, videos, all of that, all of my testimonials where you can contact or apply for a mortgage is on here. But I know it's March 1st. I'm a little bit tardy on the February mortgage update, but we've got a good one for you. As always, what I wanted to go over was zero down options. And don't shut down your computer, even if you are like, I've already got a home, or because you may know somebody that is looking for a zero down option. During COVID, I would say I did not originate any of these three loan programs for probably 2 or 3 years during COVID. Why? Because there was so much buyer demand. A lot of these zero down options, if you submitted that to a seller, there was 20 offers per home. They had, 19 of those had a higher down payment, which looks stronger financially to a seller. And so I wasn't originating a whole lot of these. So I think it's very, very important to refamiliarize ourselves, whether you're a realtor watching this, one of a client that I've done a purchase, refi, whatever for, maybe you'll have a friend, family, coworker that's looking to buy a home and doesn't think that they're able to do it because they don't have this massive nest egg or 20% down. It's the biggest misconception is mortgage is that you need 20% down. So let's jump into the February newsletter. And look, I, of course, had to redo the branding on the newsletter. As always, we'll talk about rates, internal turn times, appraisal turn times. But the number one thing is I want to talk about zero down options. And we need to get rid of the negative connotation associated with zero down options because they are back. I've done several this year. And once again, during that crazy COVID market, I hardly did any. So I really wanted to go over these. What are the most common options? And I did a little kind of high level info sheet on each of these. Okay. So the three most common, I would say, and if you're not on my email newsletter, please contact me. I'm happy to put you on this. You get a monthly photo of Cruz, my son, who's just an all-star. And then I brag about myself a little bit. I'll be in the whistle. I still play outdoor soccer for Bellingham United. I'm hanging up the boots for outdoor, though. I didn't play last season. But indoor, my old 31-year-old self is still hanging out. Look at me there, all happy. So we're playing in the final, Showware Center in Kent on Sunday. Wish us luck. But here are the three most common. So one is the Washington State Housing Finance Commission Home Advantage Loan. And while I'm doing this, see, I need to make edits here. I want to go over a few key pieces to each of these. So the Washington State Home Advantage one has an income cap of $180,000. There's other programs within that have a lower income cap. So reach out to me about that. Some of them have a little bit sweeter pricing if you're under a certain income level, but the max income cap is $180,000. The location restriction is you have to be in Washington State. You can only use it on a 1 to 2 unit stick-built home. So you could buy a duplex on this program, and condos and manufactured homes. It needs to be your primary residence. It's not for investment properties, second homes. Mortgage insurance, it follows underlying lien. So Home Advantage is we broker it through the state, but it's still a conventional loan or an FHA loan or whatever that is for the underlying lien. So the mortgage insurance follows conventional guidelines, FHA guidelines, things like that. Debt ratios, 50% max debt to income ratio, can go higher sometimes with automated underwriting system approval. So if you have questions on that, let me know. Debt to income ratio just overall is if I make $10,000 per month or $5,000 per month, whatever that gross monthly income is, say it's $5,000 per month, okay? You can only lend up to 50% of that, so $2,500. Then I have to subtract out any current debt that you have on a credit report, $500, let's say. Whatever's left over, which in that example would be $2,000, that's your maximum allowable mortgage payment, okay? So that's how the debt ratios work. Minimum FICO is per agency, but most of the programs are 640 on this. And then just some other facts. You can own another home. You can have a non-occupant co-signer, but you have to be a first-time home buyer to use the down payment assistance. So Home Advantage, you can also use that with like a 3% down if you're a first-time home buyer, 3.5% down, 5% down, all of that. And you can own another home. You can have a non-occupant co-signer. But if you want to use the down payment assistance and truly do zero down, then you have to be a first-time home buyer for most of those down payment assistance programs. The second one is USDA. USDA does have an income cap, okay? The income cap, which if you click on this link, will take you to here. Depends on what MSA area you're in. So in Bellingham MSA, you have to look down here. If you're a one-person household, the income cap is $115,300. All the way up to, unless you have a 5-person household. So married, 3 kids, right? However many people are in your household. But we also will have to look at the income for anyone in that household, and that goes towards that maximum cap here. So it jumps to $152,200. Sorry, let me go back to here. There's also location restrictions. So look at eligibility. If you click on this, you can look at this map. If you can see where I'm at right now in my office, it's not in an eligible area. USDA loans have to be in rural areas. It cannot be in city limits. So if you use this, you can search up any property. You see a property like online, use this tool, look it up to see if it's USDA eligible. Property restrictions, so it has to be a 1-unit stick-built home or a condo or a manufactured home. Cannot be a duplex, triplex, fourplex. You do need to live there, primary residence. The mortgage insurance is 0.35% of your loan amount divided by 12 as an annual fee, okay? And then debt ratios, this ends up being the hardest thing with USDA loans. Debt ratios, the front end is 29%. That means that the mortgage payment for the USDA loan cannot exceed 29% of your gross monthly income. The back end of 41, that includes all your other debt with the mortgage debt, cannot exceed 41% of your gross monthly income. Minimum FICO is 640. They do have an upfront loan guarantee fee of 1% that gets financed into your loan. It's 1% of your loan amount, and you don't have to be a first-time home buyer to use USDA. Now, VA, income cap, there is none. Location restriction, there is none. Property restriction, you can do a 1 to 4 unit stick-built home. You can buy a fourplex with a VA loan. Condos or man homes, you do need to live there. The mortgage insurance, there is zero mortgage insurance on VA loans. Debt ratios can go to 50%, sometimes higher with automated underwriting approval. Minimum FICO is 580. You do have to be a military veteran. You have to have VA eligibility, and you may have a funding fee depending on the veteran. If you have some sort of disability, you're exempt. If it's a first-time use or subsequent use, there's different percentages. It goes as high as 3.6% that gets financed into the loan. So those are your zero-down options. I'm, of course, just scraping the surface, but I think it's very, very important to go over those again. So let's go over rates. As of yesterday, I pulled these. So what we've seen, the mortgage rate trend, we've seen mortgage rates trending upwards. I know we were getting a break here. Let me make my face a little smaller. We were getting a break here. I always like to go to Freddie Mac's. This is the average 30-year rate as of 2/29 is 6.94%. As you can see, the low here was in January 18th, 6.6% on average. We've gone up, a 0.25% or so. Lots of stuff have gone into that. The Fed's talking pretty tough, may not hike rates as early as people thought, so on and so forth. Even though inflationary numbers keep coming down, the PCE number, which is, basically inflation at the producer level, went down to 2.8%. Really, the Fed wants to get inflation down to 2%. However, CPI the week before came in hotter than they thought. So it's just volatile. I don't know how else to tell it. No one has a crystal ball. I listened to 2 economists, really well-known economists speak. They think mortgage rates will be near 6% by the end of the year, but everyone's guess is as good as anyone's. And really, no one's going to say for certain that it's going to be 6%. But what is that going to create when mortgage rates go down? Well, as I always show in these mortgage updates, is mortgage applications, right? If mortgage rates come down, mortgage applications go up because it's cheaper to borrow money. So people want to buy a house. So more buyer demand does not necessarily mean that more inventory is coming on the market. I know a lot of builders, I talked to a lot of builders, a lot of them have paused on their home starts or are just building a few. That creates compression on inventory. The other one is 70-something% of people have under a 4% interest rate. So unless you're, I talked about this last month, death, divorce, moving for a job, moving to be closer to family, you really have to sell for some reason. Those people are keeping those properties as rentals or not selling them. So we are going to have an inventory problem this year. I do not want people to think, oh my gosh, 6% rates, I need to wait, because I could be wrong. I hope I'm wrong. I hope we have this massive spring market where everyone's selling their house and everyone's happy. It just doesn't happen. COVID, when we had 2.75% 30-year paper, we had the problem of low inventory as well because everyone was buying a house, right? So there's new market, new problems. That's what I tell everyone. So if you see here, mortgage rates are, once again, 6.375. You're paying a little over 2 points to get to that. So, higher sixes, you're paying a little bit less. You're probably near par there at high 6, low 7s. But interest rates, once again, have gone up just a tick, probably 0.25% in the last month or so. But mortgage applications are down. If you look back at this, 10.6% down. This is nationally. That means more opportunity, less competition on those properties that you guys are seeing as a buyer. So internal turn times, things are happening really quick. We can get files through. I just had a closing. That was 3 weeks. We're pre-underwriting a lot of buyers. With that being said, if you've got a property that you're potentially looking at selling off market because you don't want to have 100 people through your house, or you've got kids, or you got a lot of stuff to move, whatever, I've got so many pre-underwritten buyers that are ready to go. Reach out to me. I'd be happy to send your property out to them and see if they'd be interested. And appraisal turn times are happening very, very quickly as well. Alrighty, happy February. March, I think, is going to be another volatile month. Hopefully more inventory comes on the market. Hopefully more quality inventory comes on the market. My biggest thing, if you're a current homeowner and you are thinking about listing your property, make sure you consult with a trusted local real estate agent. I've got a bunch of amazing partners that I can refer you to, a local team. It's very, very important to price your home properly. I've seen homes that have sat on the market because they're overpriced. I've seen homes that are priced aggressively or correctly get multiple offers. If you're a buyer, right, that's the seller side. If you're a buyer, get pre-underwritten with a local lender. It matters who you work with, right? When a seller's looking at 2 offers, apples to apples, number 1 is terms. What are you offering in a price, close date? Are you getting an inspection? That is number 1. Number 2 is, who are you working with? Who are you pre-approved with? If terms are equal, apples to apples, and one buyer is working with a trusted local lender, hopefully me, and then the other one's working with Joe Schmo out of Florida, who is that seller that lives in Whatcom County going to choose? Right? They're going to choose option A with the local lender who they've heard of. So it really matters who you work with. Encourage your friends, family, coworkers to work local. It's very, very important in this low inventory market to have your pencil as sharp as possible. All right, I will see you next month.